Joining me now with more insight on the day's trade is Simphiwe Letlojane from ABSA Investments. Simphiwe, thanks so much for your time today. Monetary policy in focus. And let's start with the Fed, right? Markets overwhelmingly pricing in a cut already. It seems like a done deal. But what I'd like to get from you is maybe thoughts around monetary policy come 2026. A new Fed chair to be announced, most likely going to be a Dove. And will this person have enough swaying power, right? Because it is a committee after all.
Yeah, I think there's quite a lot of rigor in the overall committee, a few members in there as well. So it does get debated quite rigorously, and it's very data-driven overall as a process. So do think that they'll continue, focusing a lot on the inflationary environment, but not only that, but also just employment environment, because they have essentially a dual mandate to try and make sure that you can contain prices, but also at the same time ensure maximum employment. And from an inflationary point of view, inflation not necessarily at the target, so anchoring a bit more above the target around 3%. This was prior to tariffs, and of course then the impact of tariffs is effectively making it even harder for them to get to that 2% target. But employment and the labor market, there's some signs of fragility, and that's what's been driving some of the recent cuts that we've seen lately. So we do still anticipate that they will be on a cutting cycle even next year as well. The tricky part, of course, just remains how inflation continues to move.
And a really tight balancing act for the Fed in particular, because here we are with, delayed data, especially when it comes to inflation. At least with unemployment, we get the private sector numbers. And I'm wondering how that clouds their judgment, because you have a picture when it comes to employment, but not much on the inflation side.
Yeah, it definitely is a tough environment to be in, especially given that at this very juncture, you do need to get a lot of insights about what has been playing out in terms of the tariffs that were announced earlier in the year. Is there an impact coming through from that perspective? What are some of the producers saying on the ground? So that build-up of bottom-up information is quite critical in terms of them being able to then effectively judge where the direction of travel is from an inflation perspective. But of course, as you mentioned, there is a bit of data on the other side of things that has given them the confidence to consider some preemptive cuts.
And it'll be interesting to see how much a more dovish Fed will influence the SOB, if it does, because on our end, we do have to also, control inflation. We have that new target coming through as well. So it'll just be interesting to see how that plays out. I want to move over to some company news. The founder that is of Dis-Chem, Even Salzman, retiring. How are you reading this move? Do you see this leadership change ushering in a new strategic era for the company, or will it just be business as usual?
Well, of course, when it comes to succession plans, definitely do hope that there is a nice gradual shift in management that doesn't necessarily scare markets where it's something unexpected or something that is unplanned and there hasn't been any successions. That definitely isn't the indications that we're getting from this. I think it's been long coming, it's a long time coming, and it seems as though it's more of just a shift in control away from the founding family members to effectively just allowing, other people to come into that management realm. And so we do anticipate that chances are there will be a bit of strategic shifts as well. But what is important is that the outgoing director is still going to be involved in the overall decision-making process and will still be, part of the non-exec. So definitely anticipate that there'll be a smooth transition from that perspective.
And then over in property, storage has raised about 500 million rands. The money, of course, going to support its growth strategy, acquisitions, as well as developments. Your thoughts around that? Storage also, operating in a property segment that's quite specific, where it has a big market share.
Yeah, I mean, they're actually quite dominant in that space. And I mean, if you're looking at property in general, it is one of the sectors that we think are a bit more resilient in terms of, well, have been a bit more resilient in terms of what has played out in the overall property sector in general. So that storage facilities, data centers, and, smaller retail has done better than, your large cap normal REITs that are, anchored towards office that has seen quite a big knock. So I definitely think that there's a lot of positivity to this expansion that they are doing. Of course, in the regions where they have been operating, they've been fairly successful in terms of just overall, getting a clientele into those properties. So definitely, that expansion into some of the other metropolis definitely expected to bode well for them.
And just to pick your brain around the property sector, is there more upside there, or has all the easy money being made? I mean, generally we have those lower interest rates also working in property counters' benefit. Just this week alone, Storage, Equitas, Hyprop, all being able to raise millions to fund their growth strategy. Last week, Vukile and Growth Point lifted their guidance.
Yeah, I think the easing monetary policy environment definitely playing in their favor there in terms of, and overall just what we've seen from a bond yield perspective.
Yeah.
So there's a lot of, compression in yield curve and monetary policy easing on the shorter end. So overall, that means that the cost of debt is becoming a bit more palpable, and so hence, these companies are now opting to go for that as well. But overall, I think, of course, there's still quite a lot of price discovery that is happening in the property market, especially after some of the structural changes that we have seen. So we're still, just in the early stages of effectively what we can deem to be a fairly new-ish property market because of some of the changes that have taken place. If you think about the office sector, we no longer work from home as much, even though those trends are starting to come back, but definitely was a big shift from that perspective. Even some of your more bigger retailers have also struggled because, the most localized, smaller retailers have done a little bit better. So there's still quite a lot of price discovery happening in terms of what is overall happening in the property sector, but it has been quite a nice gradual recovery from some of those significant losses that we had seen in the past.
And I mean, you see it even in Vukile's recent results with that township portfolio doing really, really well. All right, let's get your stock pick. Where are you seeing value at the moment?
Yeah, I think our stock pick is Pepco. And in fact, I think I would make it a bit more generic to say we do think there's quite a lot of value on the table for retailers. But picking Pepco because I think it managed to kind of weather the storm a little bit better this year, and also has quite a lot of growth levers, especially given the large consumer base that they have, and also the different types of markets that they're looking to tap into with that large consumer base. So fintech largely needing quite a lot of scale, and that offers quite a lot of opportunity for them. But also some of the underlying businesses, they have quite a high quality in nature. The electronic stores that they have, and there's quite a lot of diversity in terms of their overall strategy. And then, of course, from a macro perspective, being a little bit more on the lower end of the price perspective does benefit them as well in terms of being able to cater for consumers in such a tough environment.
All right, let's leave it there. Pepco for Simphiwe. Thank you so much for your time and sharing your analysis with us today. Now, that was Simphiwe Letlojane from ABSA Investments.